we have three very esteemed speakers for our panel session. Alex King, we have Nishit, and Siang. Although for most of the industry, you don't need an introduction to the three of them, but for a formality, I will do a quick one. So Alex is the founder and the CEO of Actuaries on Tap, and this company was established early last year, and now it has grown to 28 or 29 or 30. I've lost count. About 20-ish, 30-ish actuaries, and offering support and advice to insurers and reinsurers across Asia. So before Actuaries on Tap was established, Alex was the founder of, Alex was the MD in Asia for Pac Life Re, where he led over 100 in his team and grew the reinsurance premium by over 400% over 5 years. Nishit is the CEO of Aviva Singapore and has been for the past 8 to 9 years. Some exciting times ahead. Over the last 30 years, he has been in the industry across Singapore, India, Philippines, UK, and Thailand. And this includes a variety of roles in the areas of regulation as well as consulting. And Siang is the CEO of Manulife Singapore, where previously he also held many senior positions in life insurance companies. He was also previously the president of the Life Insurance Association and has been the vice president of the Singapore Actuarial Society, along with recognitions that he has received, which there's just too many to mention, and I will not go into all the detail. So, conscious of time, we have a wide range of topics to cover, and I will hand the reins over to Alex.
Awesome. Many thanks for that. Good morning, everybody, and welcome to the panel session. Certainly the last 12 months have been an interesting period. I think it was around 13 months ago, a lot of us, I think, were gathered in Sentosa for the big conference there, and there was many things that as a group we all took for granted, mingling around, being able to attend conferences. And I think if somebody told me back then that 12 months later we'd be doing a remote conference here with 270 plus people, I think I would have not believed them. But given this is a remote conference, I'm really appreciative of everybody making time in their schedule this morning to join this session. And what we plan to do this morning is to make it a very topical session. So what we'll do is we'll look back on the last year and also look forward to 2021. I've got a number of questions that I'll put to both Nish and Siang, but I'd like to make this as interactive as possible. And I noticed from the last session there were 2 questions raised, so hopefully everybody's got the gist of asking questions, but please do ask them from minute 1. And you can use the Q&A session at the bottom, so Q&A button at the bottom of the Zoom link that you have. And as those come through, I will ask as many of those as I possibly can to Nish and Siang. So we've already been introduced to both the panelists, but maybe just my own personal touch on both of the guys. So I've known both of them for over 9 years, and this is a genuine belief of mine. I think both of them are probably the most smiley, the most warm, and the most friendly CEOs in the market. And as I say, I've known both of them for the entire 9 years that I've been in Singapore, and it's great to be hosting a session with the 2 of them this morning. And I think they'll have a number of bits of information and bits of insight to share with you all this morning. Okay, so I'll get cracking straight in. So I'll invite Siang to start, because I know he has 3 slides that he'd like to share with you this morning in response to my first question. So my first question this morning is, what is, in your view, has been the biggest challenge in 2020 and the headwinds as you see it going into 2021? And I'd also like you to maybe share some specific emerging issues that you believe are important for the audience today to be fully aware of as we move forward into 2021. So I hand over to you, Siang, and if you can share your slides, that would be great.
Right, thanks, Alex. Yeah, I got only two slides or 3 slides to share. Firstly, thank you for inviting me to this session. It's an honor, right? Being an actuary myself, ability to be able to come to this session and share with all of you, and also to probably more interact with all of you to see different insight and get different perspectives in terms of what is going on, right? I think I won't share much about what's happening in 2020, but I think I can give you a bit of a lowdown in terms of what happened to the industry and perhaps to Manulife as well. And as all of you know, I think 2020 can be a challenge, especially starting in March and towards April and the second quarter this year. For Singapore, we gone into a lockdown. They call it the circuit breaker. And during this period, clearly, I think businesses are challenged. But I think at the same time, you have seen, all of you probably are very well aware that the businesses are able to accelerate the use of digital, especially by the intermediaries, right? Towards the second quarter of this year, especially towards May. So I will share a bit more on that with you. What I also like to share, perhaps a bit more specific in terms of channels, how do we see the channels moving forward, and also in terms of servicing, right? How would companies think about servicing going forward in terms of the customer's trend? Okay, so let me start off with the impact first on COVID. Clearly, I think sales for us are very critical because we need to support our expenses. We need to make sure we meet our KPI to our bosses, right? And sales are quite clearly a bit of a challenge because if you look at our business, you know, even though we say we have done some digital stuff, but we are still face-to-face, right? By nature, agents still see their customer face-to-face. The bank still kind of waiting for customers to walk into the branches and do business, right? But I think what is heartening to see during this period, and it's probably is a proof point, right? The relationship between the customers on agents still play a very critical part, right? The interactions that they had with the customers, the warm relationship with the customers does help the agents to survive a lot better during this period. So I'd like to share maybe a few chart with you here. Just give me a second. Let me try to share this with you. Okay, I hope you can see this. Alex, can you all see this?
Yeah, all good.
All good, huh? Let me put it into full zoom here. Right, okay, if you look at this slide, you can see second quarter clearly struggling, right? But third quarter, you know, rebounded. And it tells you that insurance play an important part, right? Despite the economic challenges, right? Why? Because if you look at the needs of the customers, there's still tremendous needs for protection, especially so now they are more concerned with respect to the risk to their health, the risk to their family if something should happen to them due to COVID and so on and so forth, right? So I think you can see this is interesting. Second is, I think, low interest rates. Suddenly, I think our products become more attractive because now people are aware of the need for returns and the need to plan for their long-term retirement and so on and so forth and their long-term goals, right? So I think the market did rebound in the third quarter, but second quarter, clearly due to COVID, there was a struggle. But the impact is a bit different across different channels, which is the next page that I want to show here. If you look at tied agents and you look at FAs, right? Clearly, they struggle a bit during the second quarter, but they did not struggle as much as the bank, right? And the bank clearly has a big challenge during this period because they do depend a lot on customers walking into the branch, right? And likewise, when things kind of return, you can see that the agency business and the FA business, pretty much their advisory business, financial advisory business, they did pick up tremendously and strongly due to the demand for insurance products, as well as their ability to go back to the customers given their relationship. For the bank, they did recover, but as you can see here, the recovery is not the same, right? And in terms of the non-face-to-face, clearly during the CB period, people can't do face-to-face. And I'm sharing with you, this is my company's experience, right? We have to shift to non-face-to-face. Basically, the agents cannot meet up with customers. The bank cannot meet up with customers. They have to leverage on non-face-to-face tool to meet up with customers. You can see that, again, the agents are very quick to pick up the non-face-to-face, and then clearly the bank later on will pick up as well. But customers are warming up to this, right? Okay, give me a second. I need to move on from here. Have I stopped sharing?
Yeah. It's just your face now.
All right.
All good. Yep.
Okay. So clearly, I think it is interesting to see too that during this period, we've seen quite a pickup in protection sales and also digital sales. We have seen, companies like Etika, Great Eastern, a few other companies, right? Even the FWDs and Sing Life, they have picked up quite a lot in digital direct sales. Even for us, where we have digital sales through the bank, that has picked up tremendously as well, right? So I think that kind of tell us a bit about change in consumers' behavior. From servicing perspective, and we are interesting to see that even though like we shut down all our service center, right? People can't basically walk in, they can only use call center and digital self-service. We are able to actually service all our customers, right? Customers are getting used to be able to deal with servicing without face-to-face, right? And last but not least, we've seen a lot of introductions of e-services by all companies, right? That was accelerated during this period, e-payment, e-contract, e-statement, etc. Right? So I give you kind of a lowdown in terms of what happened there. Very quickly, moving forward, how does that change the landscape? I think for advisors, they still play an important role, given that what we have seen, the importance of warm relationship and interactions are important for life insurance sales. But I think the digital enablement of advisors, including the use of omni-channel approach in engaging customers, will become more important for the advisors. They can't be just purely face-to-face. They need to dependent on non-face-to-face tool and other tools to support their interaction with the customers, because that's what customers may be accustomed to going forward. And second is, I think for agency as well, I think for advisory, there's a need, especially from regulatory perspective, they need to enhance further in terms of the culture and conduct for the industry, and they need to build competencies and better align with companies in terms of how they can interact with the customers and align with the companies in providing the service in the future. I think that's coming, right? On the bank perspective, I think we can see that branch traffic is badly affected, right? It's very critical. People are more comfortable to self-service with the bank on transactions, so you see less traffic going to the branches. And COVID clearly triggered in terms of how customers change in terms of their behavior, in terms of how they transact with the bank, including the sales of insurance products, right? They are okay to go through non-face-to-face to transact on insurance products. And I think for the bank, there are more disruptions ahead because of open banking trend across the world, which likely to kind of disrupt the way bank engage the customers. And I think for the bank, clearly they need to rethink the model, better leveraging on data to better engage customers with the right offer. And I think the bank, they do have the infrastructure to build the right ecosystem to increase opportunities for warm lead to introduce suitable products for the customers. In terms of customer engagement, right? Clearly, I think as I highlighted earlier, customers are more accustomed to deal with processing of their insurance transactions online. And clearly, they are comfortable to deal with online digital without intervention of a person and less need to visit customer service center physically. Hence, I think more and more you'll see companies likely to amp up their digital on self-service platform. They're likely to leverage on emails, for example, to engage more of the customers, to keep customers more informed. So I see the trend is kind of moving towards that direction. And I hope I did give you a flavor in terms of generally how we see the industry moving forward in Singapore, especially. Thank you. Back to you, Alex.
Great. Thank you, Siang, and some great insights there on channel and the need for advice. And I think what we'll do is we'll touch on that again a bit later as well. But before sort of probing a bit more into that, I'd like to maybe pass over to Nish to get his views of a similar vein in terms of the challenges that he sees coming out of 2020 and also the headwinds going into 2021 as well. Nish, you're on mute, mate. If you click in the bottom left-hand corner, yeah, sure. Oh, good.
Alex, I've now become a bit digital savvy, so I know which one.
Classic.
Yeah, good morning, everyone. And Alex and organizers, thank you. I think I have attended a couple of these conferences, and I feel good about being part of it, even albeit in just for a short period. I probably don't attend all the sessions, but I just wanted to share that the reason why I feel happy about attending these conferences is because I actually went away from actuarial for many years now. So I think probably the best part of 15, 20 years, I didn't attend any actuarial conferences. It was always the 29th of June that I was trying to get my CPD hours in and keep my qualification, and almost got suspended once or twice by the institute. And so I still survived, but I actually started to attend the conferences in India. I think the ones in Mumbai, and I think Dad's an actuary. So I started to go with him, and then I felt as if I was attending the ones in India, I should be attending the ones in Singapore. So thank you for inviting me. And I think if I had, so I'm not as organized as Siang is, probably not as smiley as Siang is either. And as Charlene said, there's exciting times ahead. Probably I use that as an excuse for not having slides and sort of being inundated with work at the moment. But I think if my comments were very different from Siang, I think you guys would be very surprised, because we work in the same industry. I think there will be some differences in the way the business models are. There will be some differences in the way we think, but generally, so maybe I'll just give you my view of 2020, and I try and 2021 maybe talk a bit separately of that now. So I think 2020 exceptional year now, in more ways than one. I talk a little bit about Aviva, talk about the industry. The first quarter we all sort of got off to a pretty good start, and things look pretty rosy, and suddenly life changed overnight. And I think the change caused different levels of, I'd say, almost panic, probably anxiety among staff, among advisors, customers, and I dare say shareholders as well. And I'll probably touch upon a little bit about the transaction that happened for Aviva. I sometimes wonder it was actually accelerated because of the COVID situation. Maybe I may be wrong on that, but I'll talk a little bit about that now. And work from home, I think, was a completely new experience. And if any of you all sit there and think there is a much easier experience for if you are a CEO, then let me tell you, it wasn't any different. It wasn't any easier. Did I enjoy the work from home? I'd say, yeah, I did. I didn't have any meetings between 1:30 and 3. I think you guys probably can guess why. So yeah, I did have a nap most days, and but I hardly ever work after 7 in the evening. I for many years I start early, but I finish around 7 and hardly ever look at emails. I probably don't attend most of the meetings that London calls after 7 o'clock in the evening. But I was suddenly working late in the evenings because that nap in the afternoon was helping. I personally felt I wasn't as productive from home. And I think it was very difficult. You want to get the pulse of the staff and the advisors, and you can't see them. And you can have lots of meetings, Zoom meetings and stuff. And a lot of times people switch off their videos, and so you feel even, you don't feel close enough. And I'd say I probably, overall, I enjoyed my work from home, but I wouldn't want to do it probably again. I have been in office every single day for the last couple of months, and it feels very normal, back to normal. I'll just share with you that the staff were sort of, when I used to do some of these chat sessions with the staff came and asked me, how is this situation different from 2015 when we lost DBS as a partner? Because there were so many commonalities in it, and one of them was very simply, I think for every human being, the way I look at it is the biggest fear is losing their job. Now, obviously, losing their life is more worrying, but I don't think any of us were really in a space where we would lose our lives, but it was like losing jobs, and everyone was very fearful. And then obviously my mind goes back, and I had to answer that question. And as in 2015, I knew what the problem was. Now I knew that we lost distribution. If we could revive distribution, we had a future. If we didn't, we didn't. I mean, but no, I knew what the enemy was here. I just didn't know what was going to happen. We were looking at how many cases in the community and waiting for government to give you guidance and stuff. And there was, it didn't feel as if as leaders we were in control of the situation. I couldn't figure out what, and I think the thing that worried me most was obviously business worries you, and I mean should worry you if you're a CEO, but what worried me most was what if something goes wrong with some of the staff that we actually asked when we asked them to come into work. You know, something could go wrong, and what happens after that? And then we had an interesting incident where the staff were in the office and there was an MES inspection, and some of them were not wearing masks, and we got fined immediately. And my immediate reaction to that one was, that's okay. You know, not okay that we were flouting the national guidance, but I felt the staff was stressed as it is, and I think just to worry too much about the fine would have. And I was honestly very worried about staff now. And I think if we look at business, sales came to a standstill, and suddenly we were okay with no sales during the day. May was the lowest month in last 5 years, and suddenly NF2F became a buzzword, and WebEx became a buzzword, e-sign, and I think I'd share something relatively funny, because I think some of y'all who work in the big tied agency companies or the big multinationals, you probably won't understand this one, or you wouldn't have seen this one. But we had advisors who didn't even have an iPad. And then suddenly we are saying you've got to do everything digital. And I think there was, I think you can imagine the situation that now we are having hours and hours of digital training. And I was just wondering, and we said we taped all those training and anybody could see. Then I think a lot of the guys were, no, absolutely, because they didn't have, a livelihood. And I think they had to change. And how many times did I tell them to become digital, and nobody ever listened to me, and then suddenly nature forces them to make that change. And I think I'm delighted that we made that change, and we've invested in that, and I think that will hold us in good stead in the future. And if business and sales and people and all that wasn't enough, then I think we had the financial markets in complete disarray. And I think we had a new beast called RBC, which appeared on the scene. Sorry, I shouldn't use that word. Why are you still there? I'm sorry. But RBC appeared on the scene. And if I'm not very close to all these things. And now I'd say thank you to Sirki and some of the other actuaries who sort of took me along to the MAS for discussions. But no, they always knew that I was only going to introduce them to MAS, and I wasn't going to add anything technical. But the RBC2, I think, if you, in my mind, came in at absolutely the worst moment possible. I think we couldn't have found a worse moment than to introduce RBC2. Then I think was it end of March? I think was it end of February, end of March. And I think interest rates had dropped like a stone, and I think the actuaries were confused for once. And I think the others had a wry smile on their faces that after all, actuaries are not God, even if they still think they are. So I think it was interesting as were these new interest rates, which are down 75 basis points, were they the new norm, or were they a temporary blip, and were they going to go back? I guess I think the actual world is still arguing on that one. I know where I stand on that one, but never mind, if the actuaries ever agreed with one another, then life wouldn't ever be the same. But I think MAS reacted very swiftly and proactively, initiated discussions and temporarily. My mind actually went back to 97, 98 when I was the MAS actuary, and we had moved very quickly then as well. And I think we had done something, quite a lot to actually help the industry go through that. And I'm delighted that MAS, I think Sirki will agree with me that even when we went for the first meeting, some of the issues that we were going to raise, they were raising themselves, and so I think those meetings were, and I'd say the shareholders, I think, worried as well. I think sometimes they don't exactly say that, but could the Aviva transaction have been a little bit because of the guarantees in the power fund? Because UK, they don't know what power business is. I think it's gone for a while. So now I think they look at it and say, okay, it's a small business with the guarantees. And they say, I don't give a damn about what you think where the interest rates are going. I have no capital, just go and match it. And luckily I had to listen to them, and I matched all my assets and liabilities way before we engaged in any of these discussions whether interest rates were going to go up or not. So I think shareholders, I don't know. I think, you see a lot of the European shareholders. I think you see Zurich, Standard Life, Aviva. I don't know. I hear some others as well and stuff. I think it's not a great sign, but I think guarantees, let's be clear, it's going to be a problem as we go forward. Shall I just keep talking about 2021?
You can do this. I'm keen to make sure we change gear so we don't suck all the positive vibe out of everybody where we sort of look at the doom and gloom. I think it was a good place to start. I think it's important to then move on to opportunities.
Can I just add to the gloom?
So happy for you to continue, for sure.
Yeah. Let me finish with the gloom. And I think one is 2021 doesn't look that great from my point of view, from job losses point of view, because government subsidies will stop. And I think the government subsidies is something that the quantum of the subsidy this year is something that people, I think, don't realize how big it was and how useful it was. But when it doesn't come through next year, there will be implications. I think couple of things for Siang. I think slightly disagree with his slides and sales. I look at sales only from a regular premium point of view, because that's where I think the expenses comes through, and 17% down on last year, I think is not a number to be trifled with. And I think it is going to have an implications going forward, because on expense, we'll talk about that in a minute. So, and Siang, I just say, it's 2015. Since then till probably start of this year, I always was regretted and was disappointed that I did not renew the DBS partnership. For once, Siang, I feel I'm glad I'm in my shoes and you are in yours. So we'll end the doom and gloom on that sort of slightly and get back to you, Alex. Now, thank you.
Cool, perfect. Thanks for that, Nish. So as I said, I am keen to sort of move forward and look towards 2021 and say, right, okay, yes, there are some headwinds, yes, there are some challenges, but I think there are also some major opportunities that are out there as well. And I think COVID has certainly brought insurance to the forefront in customers' minds. And keen to hear from both of the guys on their views of where they see the major opportunities going into 2021 to sort of balance some of these headwinds and challenges that we see. Maybe Siang, if you want to start, and perhaps a retort back to Nish's view on the DBS as well.
Yeah, clearly I have a tall order. I have a job cut out for me with DBS. DBS is a giant, right? So if you look at the landscape in Singapore, close to 60-70% of business for Manulife come from DBS. And if you look at DBS as a channel on its own, it's huge, right? It's probably one of the biggest channel on its own in Singapore, bigger than any other channels in the markets, right? But I won't delve into that. It is a job to be done, but DBS are great partners. We are continuing to pivot. What is exciting, even though the job is not easy, but I have to say that, working with DBS has been a great learning experience for me as well. The key is really not about looking at the present now, it's really looking into the future as well, right? Both presents and futures. We working with the banks clearly create a lot of rethinking in terms of how we're going to tackle the consumer needs in the future, right? I think the focus is not so much about, is it just top line sales, like what Nishit mentioned, doing single premiums, doing products that don't really generate a lot of values to the customers, right? Even though some of these products are still necessary, but is it really generating the right value for us as an industry? that's a big question mark, because ultimately, as an industry, I think we individually as a company, we only thrive if we as an industry thrive, right? So if we destroy ourselves through some lousy products that we have to compete together, I think over time, I think we're going to face some challenges. We can do some of these, but I think ultimately, you know, we can't do too much of it. It consumes too much capital. It doesn't give us enough profits. It doesn't bode well for us in terms of helping the customers meet their financial needs in the long run, right? So I think working with, looking through the opportunities, I see there's a lot of opportunities to change, because I think the insurance industry, we have been doing the things we used to do. If you look at our products, we have never been that innovative. If you think about it, the last big innovation I have to say is the Siang. Maybe we have ElderShield, I suppose, right? But ElderShield, if you think about it, is a product that was available in other countries like North America. But clearly, I think it is, I wouldn't say it's easy, but I think it just requires us to kind of sit down, think through what are the way to engage customers, because I think customers are more adaptable to getting, you know, services digitally. Can we kind of change the way we engage our customers? But I saw Cheng Hock's question regarding financial needs, and it kept coming back to me, right? Dealing with customer needs still require an interaction. I think that is still an important part of the journey, right? If we believe that the customers can self-discover their needs and go out and buy insurance, I think that is not happening still, right? Of course, we can put a very attractive digital products that pay more than the deposits in the bank. Clearly, I mean, for customers, those are not insurance products. Those are deposits, right? Those are, you know, 2 years deposits, 1 year deposits, or 3 years deposits. That is not really, I don't see that as a transformation in terms of us being able to engage customers directly. I still feel that until and unless we get to a stage where customers can become fully self-aware, there are tools that are so advanced that they can really tell the customers that what they really need, right? And customers are prompted to take action. I think the need for us to empower our intermediaries to interact with the customers remains the key priority going forward, right? They are, as Nishit highlighted, right? Some of the advisors are not even tooled to be able to interact with customers on non-face-to-face, right? Clearly, I think the COVID situation makes them aware. We pushed really hard in the past, but I can tell you, we have increased tremendously in terms of people who use the tool to engage customers rather than using forms, right? But with COVID, I think it really pushed that percentage up to a very, very high level. We are close to 90 plus to close to 100%, right? We still have some individual who can't do it, but most of them are able to scale up pretty fast, because when they are desperate, they have to use the tools that they have. But I believe that, I think going forward, I think we see the opportunity on data as well. I think data will become critical. And how can we work on data with our partners, right, to enable them to engage in a more meaningful conversation. So for me, the interaction is still important. The key is really, what are the opportunities for us to leverage data, to leverage tool to enable the conversation to be better with the customers, and more importantly, to make the customer journey more seamless, right? It doesn't have to be always go through intermediaries to get the service done. It can be straight through to us without interrupting the interactions between the customer and the intermediaries. So that's where I see the opportunities are. And clearly on the product front, there are some opportunities in terms of some of the products that customers potentially are interested in. They're couples, mental health, for example. Clearly, I think some companies have introduced some pandemic products. There will be some interest in those, and investment remains interest of customers, right? So maybe.
Definitely agree with a number of comments you made there. And I think one of the advantages of the situation we sort of found ourselves in is that advisors are sort of forced to adapt, whereas in a normal circumstance, if you try and get them to embrace some of this digital way of operating, it would probably have been a slower change. And the fact they had to make that change has probably made that transition easier and faster. And I definitely agree with that. And then the knock-on of that is your other point that you raised on data, the fact you're now getting this information digitally, whereas perhaps before it wasn't coming through in an e-submission form. Again, that will open opportunities of what you can potentially do with that information coming through. So yeah, completely agree. Pass over to you, Nish, to share your thoughts as well on some of the opportunities going into 2021, and also perhaps a bit more on the product side. I think that would be good to hear as well.
Yeah, Alex, I step away from sort of the day-to-day work, and I actually see what is the new normal, what has changed, and I say the impact is on all stakeholders. I think so. You listen to why, and they're going to be more agile. But if you look, it's on capital. Shareholders are looking at capital. So on one hand, you have those sort of regulators wants more capital, shareholders wants to put in less capital. GDP minus 4.5% projected for next year. Interest rates really skimming the floor at the moment. The equity market's extremely volatile. And I just wonder whether the time has come to accept that this is the new normal. And I personally feel that we've got to reshape our industry. I think that is the opportunity. I not for 1 minute do I think that our role has become any less significant. In fact, we need to play a bigger role. COVID hasn't taken many lives in Singapore. Longevity hasn't decreased. I think people are going to live long lives. I am extremely worried that when we reshape our, 50% of our business is power business, 25 I think is linked business, and neither of them are doing the job. So the protection side, I think less worries on that. People are buying more protection, and I think we got the full suite of products and stuff. Slightly less worried about the protection side, but I don't think either of the power business or linked will do the job going forward. The linked business being extremely volatile. I'm not sure our customers can handle it very well. I mean, I don't have any numbers. I've never seen any numbers anywhere in the industry where we see how well the customers have done in ILPs over a 15-year period or stuff. Now, I think at least I've spent my career thinking more about how many charges I get out of those products and what margins I make out of that. I think with profits has changed. I think so. I think the time has come where we've got to step back and say that the value add that we bring to the customers is decreasing at a very rapid pace. I think the industry will go to 4.25 at some stage. I don't know when and stuff, but I don't think we can sit here and say, okay, the 5.25 went to 4.75, has gone to 4.25, and everything else will remain the same, and all the brunt of the drop in interest rate is going to be taken by the customers. I think the customers are suddenly going to say, okay, I don't like your products anymore. I'm going to go and put more money into deposits now. And I think if you look at it that way, the more money goes into deposits, I mean, Singapore has got no chance to have a good retirement. So my point is that the world has changed, and I think we've got to change with it. And I think if we do not bring about massive changes, drops in costs, and I think bring that part of that value lost in that 0.5% per annum back to our customers, add more value in making sure that customers learn how to invest in equity funds, because they have to invest if they need to have enough money. It's not an option. I think people do not have the option to stick their money into bank deposits. And I just hope that we change. And we as a profession take this to say, we've got to add value to customers. And if I'm wrong, please correct me. But I mean, how easy is it to sit in a management meeting and say, okay, what's the impact of 4.75 to 4.25? And we say, yeah, we'll shave off the bonuses for all the in-force business. I don't think that is the way out. Is there a solution? Is there a way we can keep the bonuses? Yeah, I think we got to fight as hard as we can as actuaries. No, it's not always the case. We'll have to take risks that we've not used to taking, because that is, if we think that is the right thing for the customers, then I think the advisor world has changed. Now, if you're going to add something to the customers, the quality of advice has to change. And don't get me wrong, but I actually cringe in my seat when I see headlines of big insurers wanting to recruit thousands of new advisors. And I say, are we going back to the old ways when the world is in a new place? I mean, I think we've got 25. I don't know if any of you all know how many people are RNF in Singapore. I'd say it's between 25 and 30,000. Do we need more people to sell? I don't think we need. I doubt we can recruit graduates and change the world for our customers. I think it is the more experienced one that we got to develop and get a better quality of advice and stuff. And I think education, to me, I think we talk about customer centricity, yes, but I don't think our customers know how to do financial planning. I don't know how to do financial planning myself. I don't know what is a perfect financial plan. I just be honest. And there are days when I sit there and say, if I'm going to live till 95, which is quite a possibility, then however good my financial plan is not going to be good enough. I actually need a wellness plan to go with my financial plan. And I think maybe those are the new things that will come. I think we have an amazing opportunity to look after our customers, and ultimately all we want our customers to be happy. I think it's not about value of new business all the time, and it's not about sales and stuff. And I think if this is not the opportunity, but and I look at our health business now, and I look at it as an industry, and I say we wasted an opportunity. Now, for 10 years, we are losing money. We are not getting to the root of the problem. I know we're trying. I'm not knocking anybody here. I'm actually, when I went and met the minister last week, I sat there and I say, I'm the longest serving CEO out here. Now, I think all these guys, some of the comments that people make, I've heard it a few times now. And no, I haven't been able to shape it, but I feel if we go back to old ways for a new world, I think we will cause more grief to our customers. And I think we got to know. So it is very refreshing to hear what Siang says. Now, the bank assurance, the model is changed. If people are not going to walk into banks, then you change the model. You don't stick to the same model and give incentives to people to walk back into the bank. No? And I'm saying, so the quality of advice, and I'd say actually, I think if you guys are all up for it, let's go and start education. I think let's form a subcommittee where we go and educate our customers. We go out to schools and educate the students. But I think I don't know how to do financial planning if I'm going to live till 95. If any of you all know, let's build on that and go and do this, because this is a time where I don't think, unless we invest for a really new world, I think the old techniques, the amount of costs that there are in the system. I think I always ask this question, why can't I go to MAS and say, no, we don't want to do this? There are system conditions. I think we got to break those open. I think everyone wants to have a more efficient world, wants to use digital. Regulations were built 30 years ago. I mean, may not be relevant, may be relevant. I don't know. But now, are we brave enough to push the barriers everywhere? And I'm just saying, at the end of the day, it is for us to deliver that value to customers. And I think it's a great opportunity for actuaries. And I think we should do some brainstorming and say, what can we do to actually make this opportunity work for all of us? Because it would be a very fulfilling career. I haven't got many years left, but I think all of you all have got plenty ahead, and I think we can make this opportunity count. So probably I'll stop there, Alex.
Yeah, cracking. So really good words of advice there. And I think the key for me on that, on the education piece, and I definitely share Nish's views, that I think if we can invest as an industry in consumer education, then maybe it does open up some of the alternative channels, because the knowledge of the customer is greater, and maybe they can go down alternative routes to get access to different products. Just want to close on sort of one thing, because we've got around 5 minutes left. Sorry, Nish, go for it.
Alex, just one comment now, just one comment. And now, I enjoyed my few meetings with Sirki and stuff, and I just make this comment that Par Fund, if you guys didn't know, is 12 billion premiums. That is the size of it. And I am already struggling in our internal meetings of how we're going to manage bonuses going forward. We've got some businesses at 5.25, some at 4.75. At some stage, it'll be 4.25. How are we going to change bonuses? How are we going to communicate? How are we going to issue post-sales illustrations? I talk to advisors, they ask me questions where I say, if that question is such, there is no way I can answer because they don't even know the right question. And I think let us as a profession take this and say, we will collaborate. I think there is nothing to compete in this one. I think in the health business, we competed like stupid against one another, and we left health industry in a space where the customers are still paying higher and higher premiums because of the mistakes that we made as insurers. And I hope we can now, Sirki, if you can take the lead on how we manage the community, because I think bonus cuts is a given for everyone. How we shape it, how we communicate, I think we owe it to the customers. And if we can do it in a sort of consistent manner across the industry, then I think it will give me the greatest joy.
Yeah, completely agree. Given we're short on time, Siang, do you have any views on the education piece? Because I think there is, my personal view is there is something there. And do you have a view on how we could potentially, as a profession or as an industry, really improve the knowledge of the products that we bring to provide cover?
Yeah, I do, but maybe slightly different from the way Nishit put it. I think we can be quite effective in terms of helping to make our products more transparent through the advisors and through the company, right? So I think sometimes we tend to complicate things, right? And that kind of not helpful in terms of making our products transparent to the customers. As actuaries, I think we understand we truly understand the mechanics behind each product, how we structure them, how we design them. Can we do a better job in terms of helping both through the design of product as well as, be more proactive, especially in, when you do products, for example, think about the consumers, think about how that communication for the advisors to the consumer be, and be proactive in even pushing back to say, you need them to communicate certain things, because sometimes a lot of time actuaries tends to look at only the financials. They forget about the customer aspects, and we tend to design things that super complex, and they're not worried about how that being communicated down to the customers, right? So I'm a true firm believer that actuaries certainly can play a bigger part of that. And whenever I deal with actuaries, I expect them to explain to me so that even though I may understand the product, but I need them to be able to articulate to the extent that if I cannot understand, no one can understand, right? And I think they can do a better job in working with the distribution as they try to help with the communications of products, right? And I think what Nishit said about the power fund is true. I think we are going through a challenge here because interest rate come down so much. We move into a new capital regime. Clearly is not an easy one to handle, and with the interest rate remaining low for long, clearly the need for bonus cut is likely to be imminent. The question is, how can we do this as an industry without using this as a competitive tool against one another? I think it's not going to be beneficial for the industry, right? So we have to work together to make sure that we are consistent in our communication, that we can support each other to make sure that this exercise help us to transit to the new environment, a lot more smoothly. And I think actuaries can play a lot, in all these things, because we understand the product, we understand the challenges. We need to be more creative in the solutioning. And I think I have been dealing with actuaries here to solve different set of problems. I have to say they have the wit and the ability to do that, right? If you give them the opportunity, if you communicate that clearly to them, that is the expectation, I think they can step up. And I can see that, we can add a lot of value to the industry during this transition.
Yeah, completely agree. I mean, maybe just to echo both the comments from the guys there, and I've certainly sat through meetings where the customer is completely lost, and the technical and the detail becomes the main thrust of the conversation. And both of the guys there have clearly related to the fact that the customer really needs to be the heart of our thinking, whether it's in product design or whether it's thinking through the outcome of what we do on the par funds management going forward as well. I think it's super, super important. We're pretty much out of time, everyone, but maybe if I can just leave the guys to provide a sort of, maybe 1 minute thought from their perspective on, looking into 2021. If you could give sort of one word of advice to the guys in the audience today, if you were in their shoes, what would be the one thing that you could do? Maybe in about a minute each. That would be great.
So maybe I'll go first, Alex. And if you ask me this question this year or for 5 consecutive years, my answer would be the same. I think the thing that I benefited most in my career was when I started to move away a little bit from actuarial. And I didn't mean move to finance. I did move to finance, but actually when I started to spend a lot more time with distribution, and I'd still say that my strengths are knowledge of finance and distribution. I understand the pain points. And I haven't yet been able to connect the dot between the shareholder, distributor, and the customer. So now I know a lot about customers, but I still feel I'm learning of how to connect that whole thing together. And I'd say the more time you guys spend outside actual department, that'll be the investment for your future. And don't wait for somebody to come and give you that invitation. You got to grab it by the scruff of the neck and do it.
100% agree. Maybe just one thing to add on that. If you're looking going forward, and if any of you are worried about, maybe AI and that type of thing eroding into our profession, I think those that will differentiate themselves are those that become more rounded and can bring things in from outside, exactly as Nish has just described, and that really will differentiate you from others in the market. So 100% agree. Siang, thoughts from yourself?
Yeah, I think I will see as a crisis. I think the world go through many different type of crises. We have gone through this before, right? This is not the first crisis we have seen. We have seen the global financial crisis. We have seen different type of crises in the past. And I think eventually things will normalize to a new norm, right? You expect it to normalize to the new norm. The question is, how do you pivot and how do you change your mindset to deal with this new norm, right? Interest rate is going to be remaining low for long. So how do you think about it? Do you still kind of have the old mindset to think that you come back? I think it may not happen for the foreseeable future. The consumer is going to change in terms of behavior. So are you seeing things differently now in terms of how you design the products, right? So I think there's many aspects that we can continue to learn. So I think don't stop learning, observing how the market has changed, observing the trend, reskill yourself, get, like what Nishit said, take the opportunity to understand about the customer. I think it's very important. You can't do your job if you are so detached from the products that eventually going to be consumed by the customers. You cannot cook nice food, without knowing what your consumers like, right? Without knowing who is going to consume your food, those consuming your food, what is their taste bud, right? So I think you have to be very clear on that. If you can't do that, I think you'll be left behind. As simple as that, right? So that's my 2 cents worth.
Yeah, completely agree. And maybe to extend your analogy one notch further, I mean, my perception is a lot of us spend a lot of time with the ingredients, and we chop them and we slice them and we dice them in different ways, but we don't actually have that regular check-in to say, are our customers enjoying the food that we're cooking? And spending that time and making sure that we have that awareness, I think is super important. So we're out of time, guys. So I'd just like to thank both Nish and Siang for their thoughts and insights today. I've certainly found it useful and insightful, and hopefully everybody has enjoyed it. Enjoy the rest of the conference, and I'll see you all around soon.
Thank you. Thank you very much, Alex, Siang, and Nishit.